Hey, it's Clay at claytrader.com. This will be a review of the Power Profit Scan newsletter, which is part of the Inner Circle subscription that I offer here on this site. A lot of times people aren't even aware of it because most of the chatter is about the chat room itself, I guess, pun intended. But there is another attribute to the subscription, and it is this newsletter service that goes out weekly, every weekend via your email. And I've been, just kind of tracking it, so want to go over another week's worth of scans. A couple disclosures up front. First off, am I implying that every single alert that is sent out is a winner? Absolutely not. There's no such thing as a perfect scanner or a perfect human or anything like that. There are losers. There are ones that kind of just don't do much. And if you've watched the past videos I've done in this series, you've seen I've talked about some of those. And in fact, I'm going to talk about one of those in this week's too, to just show that, yeah, not everything is a winner. So keep that in mind. But what I do want to also illustrate is why risk management, risk control is so important, because being wrong happens. And when you're wrong, you got to make sure that you keep the losses controlled, because on the flip side of the coin, winners also happen. So when those winners do occur, you want to make sure that your account is positioned in a spot where the losses have been kept controlled, and then the winners can kind of do their thing and take care of everything within the grand scheme of trading. So just keep that in mind. Risk control matters because winners also happen. Second, I am doing this for the week of 9/3. Why so long ago? Well, two reasons. First, it's just giving the chart plenty of time to play out. And then second, it's just fair to those people that have paid. The last thing I want is for people to pay and then see the stuff on YouTube a little while later saying, well, why did I pay if it's just now public on YouTube? So at this point in time, things have played out and members have had the full benefit. So that's why I am going back into the history of the chart. So with that all being said, let's get to it. So the first one to talk about here is on ticker symbol SPN. And as you see up here, kind of questions, is a bounce coming? So essentially, was the price going to keep pulling back? Because last time in history, the price had bounced very nicely off that spot. So just kind of, was history going to repeat itself? So let's see how this one all played out. As I already mentioned, the newsletter is emailed out on the weekends. So what you see here is the chart going into the weekend, and the next candle you see will be, the opening day of the following week. So Monday, assuming that the market's not closed for some reason on Monday. But that's what's going on here is weekend newsletter, and then, bright and early on Monday is when things start to, officially start as far as these alerts are concerned. So like I said, key thing was in regards to this line down there on whether or not the price could pull back there, and if so, could the price, get a bounce from that area? So let's see how things went on the first day of the week. You can see started to pulled back some more, and now it's sitting essentially right at that green line. And then from there, it just kept on going down. And then here's kind of the crazy part. And I'm assuming people would have been taken out there because that was a very far move below there. So if you held through that, then I'd probably say you're not being very disciplined. If you had a stop loss in, you must not have followed it. But yeah, so I'm assuming people, though, were disciplined. And because of that move there, that was just too far below the line. I mean, right here, sure, it broke, slightly blow up, but remember, supports, resistances are not exact specific prices. So it was still, ballpark, I could see people, still being in through there. But that candle definitely would have knocked people out. And then even there, at that point, it actually continued to drop down further before forming here. And then this happened. There's that bounce. But you know what? This would have been a total loser just because of where it was alerted. But that's, it happens, right? I mean, has anybody ever been in a trade where you get stopped out or you get it out and then all of a sudden it goes in your favor? It happens everywhere, and here's an example of that. So the overall premise was right. It was a bounce. It did bounce, but what was wrong is a little too early. Did not bounce off of that historic spot. Actually, if you look back in the history of things, it bounced off of that spot down there. So this is totally me talking in hindsight. But I mean, if you had noticed that, then you could have potentially taken the small loss there, gotten in down around the $8 mark, which was a previous bounce spot, and then wiped away all those losses. So that's kind of a little example of that. However, again, I am trading totally in hindsight there. As far as that alert was concerned, yeah, that would have just been a losing alert. The next alert on the list, UIS, and this was, again, up as you see here, kind of threw it in a dual category, volume and trend alert. Volume for the very simple reason, I mean, you look down here, and volume by far the biggest. maybe that was close to it, but that still wasn't even close. So huge volume. And then, of course, you look at the trend as a whole, and then, a big overall uptrend. So let's see how this one played out. Again, here is the chart going into the weekend. So this next candle you see was Monday. So it started to make its move. Then went some sideways price action, and I bring that up just because plenty of opportunity. It's nothing crazy like anybody got left in the dust. Plenty of time if people wanted to, try to get in or anything like that. But this is one that I would classify as kind of the slow burn, meaning it's working. Some pullbacks along the way, but nothing crazy. Like I said, slow burn, and then made that pop right there before finally starting to roll back over and, get a little bit more severe on the pullback. But that was a 12.3% move. Was it gigantic? No, but 12% in the matter of a couple of weeks, as I always say and will continue to say, I'd encourage you to walk into your local bank, say, excuse me, ma'am, excuse me, sir, I would like, let's 12.3%, assume that was kind of the profit window. So let's say you played and you got maybe 8%. Excuse me, sir, ma'am, I'd like 8% in 2 weeks. They're going to look at you like a crazy person. And plus, this is a big board type stock, so there's plenty of liquidity here, meaning you could have easily put in, $10, $15, $20, $25,000, and you would have no problem selling. Whereas, you go to some zero volume penny stock and you buy $20,000 worth. First off, you're going to make the stock explode. And second, when you go to sell, you're going to crash the stock if it's got very low volume. But these ones, there's a lot more dollar volume and liquidity in them. So, sure, it's quote unquote only 8%, but when you could put in larger amounts and not have to worry about selling those larger amounts, that 8% can add up pretty quickly. But at the end of the day, go ahead, walk into your local bank, tell them you want 8% in 2 weeks, and let me know what they say. The final alert here to talk about is ticker symbol IGC. And this was just a pullback play, and as I alluded to here, that the dollar mark, actually $1.01, and area. So interesting area if enough selling pressure arises. Remember earlier, support resistances are not exact specific prices. There is a range element and an area element associated with it. So that's exactly why I use interesting area if this enough selling pressure arises. So again, looking for some sort of pullback over time. So let's see how this one played out. Now, real quick, I didn't put the pullback levels. I just put the one that I had highlighted in the alert, which was right down here around the $2, $1 area. I guess I could just say around the dollar area. But that is, so yes, the chart doesn't quite look the same, but I'm just, like I said, highlighting that level that I had pointed out specifically. So let's now go through and see how this one turned out. So there the pullback started. The pullback is still underway. Pullback is still underway. And then right there, check it out. The power of charts basically went, not basically, it did. We went right down there and gave an opportunity for people to potentially get in if they wanted to. Again, hovered right here around that area. And then decided to wake back up again. Really wake back up again, wake back up that much more, and then wake up that much more and went up and hit a high of 406. And honestly, I could see people holding through this just because, yeah, it pulled back, but this isn't like it was a crash by any means. In fact, I would consider that a healthy consolidation. I think any chartist, technical trader would. But I'm going to assume that, that was the move that knocked you out there. So with that in mind, that was a 287% profit window. Am I saying anybody played it perfectly? Absolutely not. But let's say you played it kind of right and you got 200%. Think about what we're saying, kind of right and 200%. Let's say you played it terribly and you got 75%. Think about that, 75% on your money in the matter of less than a month. There's no bank that's going to give you that. So very, very nice move there. And, had you held through it, it actually went that much more bonkers. And now you're looking at, well over 5, 6, I don't know the math on that, but easily over a 500% move had you actually held through this little consolidation here. But again, as far as this example is concerned, I'm just going to go with, people got out right there. So 287% move. And, this was all documented. It just took a little bit of patience for that pullback, and then that could have gotten you a very nice entry point, and the rest was history. But yeah, a 280%, 87% gorilla. I love it. A final few things here. If you are interested in joining, just go to claytrader.com/inner circle, or at the claytrader.com site. There's a place up at the top that says Inner Circle. You can click on that. As far as the cost is concerned, it is $99 per year. $99 per year. If you pull out the calculator, that is $8.25 per month. I can think of a whole lot more that costs more than $8.25 per month. If you get out the calculator and continue to break it down, that is $1.90 per week. $1.90 per week. That's why I always say I'm more than confident that over the time span of 12 months, you'll get at least $99 worth of value. So not only do you get the power scans, which is, what I talked about, but as I talked about earlier, there is also the live trading chat room. It's great for networking. It definitely is a professional environment. Yeah, we have a room where you can just kind of shoot the breeze and talk about whatever, but then there's also other rooms where it's alerts only, and I'm very strict in applying those rules. That way it's efficient, and there's not a bunch of clutter everywhere. All you see is alerts, and it makes for a very, like I said, efficient environment. And then also there is a mobile app too, so it's not like you have to stay chained to your computer or anything like that. You can still keep in touch with everything when you're out and about doing errands or doing whatever. I mean, there is the mobile app. So if there are any questions, let me know. But yeah, no excuses. $99 per year. It really doesn't get any more cheaper than that. Sure, there's free chat rooms, but you get what you pay for with free. And if you've ever been in a chat room, you know exactly what I'm talking about. But again, any sort of questions, let me know down below.